What is going on, everybody? And in this video, we are giving you a state of the market and stock picks for July 27th, 2022. So if that sounds like something you're interested in, consider subscribing, as I do provide daily and weekly updates to get you prepared for the day and the week ahead in this glorious market that we are in. So let's get right into it today. Primary focus today is Google and Microsoft. Microsoft missed on just about everything. Their forward guidance is not looking good. There's cloud growth, and then you also had Google. It's the same kind of setup here, almost, where they've missed on some things. Their cloud growth is still really good. The CEO is still mentioning that the ads is looking very bleak. Now, these are things you need to pay attention to. This is forward guidance and stuff. Now, what we need to be paying attention to is this forward guidance. What is concerning is there is a reason people are just now laying off. A lot of these big corporations just started laying off towards the end of Q2, so you're not going to see that impact now. You're going to see that in Q3 earnings, which is, again, another 3 months away. So you're not going to really see the impact that we're hearing about now till next earnings. So it is very concerning on a lot of the different fronts that are coming. Expectations are extremely low, and so these things are just rocketing. So the market's just pretty much in earnings mode, and continuing to be in earnings mode until going into tomorrow, which we all know tomorrow is going to be Powell and the rates. Again, we've had the ECB come in. They were estimated to come at 25-point basis move, and they came in at 50. Now you have Powell coming in, and they're pretty much saying there's going to be at least a 75-point basis move coming into this. So this is the concern: is Q3 going to get really, really nasty? Is the question. Especially if things are looking good. Any kind of positive sentiment coming out of these companies is providing Powell with more fuel to come in at a higher basis point move, and then realize that he's not stunting growth yet, that he can continue to push full court press until he's starting to see it more in these big corporations, your Googles, your Teslas. And if you look closely, I mean, it's blatantly obvious that these corporations are cracking extremely bad, and they are barely making it out. None of these are blowing them out of the water. Now, you have to also consider, too, that over the past couple of earnings, a lot of people didn't think a lot of these corporations would even do above average because of the pandemic, and they did. And a lot of them came way over. And so now you have even higher expectations, and then and realizing even someone like Apple, either they don't up their expectations or they downgrade their expectations, and so you come in and so you get these massive pops that, hey, we're hitting expectations, we're barely scraping by, so that's a positive thing. So that's one thing to can always consider, is that the market is trying to find the positive in a very negative current environment. But you have to also understand that there is a lot of really bad signs that we are going into a potential really bad recession. Now, how long that's going to last is the question. We're, again, very early in the recession process, in my opinion. We're just starting to see some of it. Again, it's debatable if you want to use, the two quarters of bad GDP, of bad growth, to determine if it's a recession. Other people say no, there's other gauges on essentially how you determine a recession. And when there's no one buying, this is why I'm kind of looking at very specific things. You look at headline inflation; it is done by food. Headline inflation essentially has food and energy tied into it. The Fed take it out, and that's why you get core inflation that doesn't look as bad. But you have to understand that a lot of these companies are losing revenue in a lot of their major sources, because people are dialing back and only buying necessities. They aren't buying entertainment. And if they are, they're using credit cards, because we just had Visa have a massive earnings. We had American Express have massive earnings last week. These are concerns, is what happens when people continue to run credit. They can't afford it, and then the rest of the market is doing really bad. Like, you can't even pay for food, or you can't even pay for energy because it's just extremely high. Then you got Russia threatening to cut off supply, so that going into winter months, Europe is going to be in deep trouble. And again, that's a black swan that could really, really make this whole thing spiral out of control. Yes, you can think you can segregate the U.S. from everything, but the fact is it is a world economy, and you are affected in one way, shape, or form. So it doesn't matter what you can produce in-house. It does help some. Overall, the world growing economy is going to be affected. So there is a lot going on here, and I think we're just still in earnings mode. And why we're getting these pumps, they make no sense. But there is never a point in which the market does make sense. And so this is why I try to remain neutral. And I've been talking about a lot of bearish sentiments. Right now, I'm just really trying to be cautious, because the way things are being set up, even if we start rallying, I think you could be looking for a bear market rally. In my opinion, I just think we've sold so much and really haven't had a rally. And we normally rally during earnings. I mean, that's just the way it is. I've been talking about this earnings rally. We'll get some sort of rally during, especially the Super Bowl week of earnings, with all these big techs coming up, because you still got Apple and Amazon coming up, which will really matter. You got Meta, and you also have Shop. I believe Shop is in the morning too. So you have a lot of these that are really going to make a difference, right? And you have to, again, understand cloud growth is coming down. There's really some really, and I'm not just talking like little cracks in these companies. I'm talking like big gaping cracks in these companies. And we're thinking everything's going to okay, and everything's going to go back to all-time highs. I think we have yet to see a bottom. So I'm just throwing it out there. Again, not try to change everything and have you keep shorting stuff, and then the market goes to all-time highs. But right now, I'm just being very, very cautious. If you're dollar cost averaging, that's great. If you are slowly just waiting and sitting cash, that's great too. Ultimately, I think at this point, you could potentially be buying some. I've talked about, since we've kind of gotten this level, to be dollar cost averaging a little bit at a time, not to be throwing big boatloads of money into anything right now, because you don't know. There's too much unknown until we have clarity. The market has always been about clarity. If the market can't determine what's going to happen in the next 6 months, it's going to sit out and wait, and that's what's going to happen. And so, with all that being said, tomorrow is a big day. Tomorrow we have the Fed. That's 2 p.m. Eastern Standard Times are the rates. 2:30 Eastern Standard Time is Powell fielding questions. Again, if we come in at 75 points, the market might take that as a plus. It hit expectations, and so we run. In my mind, that is one of the worst things that can happen. I think anything over 50, even 50, is bad, because what's going to happen is you're going to see this effect hurt Q3 earnings even more. Right now, a lot of these companies are barely making out. They are on crutches. And if you have another big rate increase coming into tomorrow, it's like taking those crutches away and kicking them over. And then at that point, you're going to be left with a really nasty quarter in Q3. So again, tomorrow is very pivotal on what's going to happen, and we'll have to determine what happens there. But right now, we will see. We could still be in earnings mode. The market may want to try to run into tomorrow. We did do some selling quite a bit today. But again, we had the ECB in their market move. Inflation, headline inflation, food and energy are a problem. They're continuing to run higher. Eventually, they'll come down when Russia quits playing around. But until they do, you could guarantee that headline inflation is going to continue to push and push and push. And Putin, Russia and Putin, that administration, they know what what they're doing. We're playing this cat and mouse game, or this game of chicken with Russia, and it's who's gonna tap out first. Is it going to be Russia or the U.S.? And that's what you're left in the middle, and you're going to have to deal with what the inflation and everything else that's going on until the other person essentially has to tap out. And that's currently where we're at. And if anybody says any of these earnings are great, they are not. They are absolutely absurd, and they are pure garbage. Right now, you have to also remember that we come from massive, ridiculous earnings because of the pandemic. But now it's more so, the expectations are so low that anything is a positive, and people are just running with it. And so I just say proceed with caution, because that's currently kind of where we're at. So again, Googl, interesting to see how this plays out tomorrow. CEO is kind of talking right now, so you're getting a lot of fluctuation here, but we'll have to see on that one. As far as the general index, this thing looks like it wants to roll over. Technicals don't really play though, so we have to see. We got the break, the 50. You got the retest. You could get a nice little pop back up to 39.50 tomorrow, possibly before we have Powell again. If Powell comes in high, if he comes in 100 basis moves, we're going to break this and come down. In my opinion, 75. I think anything below 75 or 75 or below, I think is going to make the market run, even though it's going to make Q3 look absolutely nightmarish, put it that way, for companies if it continues to keep running, because every rate increase at that speed is, again, you're not allowing people to catch up. You're just piling them on, and people are already dealing with a lot of stuff, dipping into saving, using massive amount of credit cards because of inflation. And now to do anything to operate in any way, shape, or form, even basic operations, are costing an arm and a leg, and much more expensive. So people have to dial back, and you'll see more layoffs. You'll see a lot more nastiness coming down the road. So SPX, we'll see how it goes tomorrow. It did break, bounce off here, get another retest, and then potentially sell off. Kind of what I'm looking at. It really just depends on what's going on with Powell tomorrow. Dollar still sitting at 107, still very strong dollar. Actually started pushing back up. Concerning Bitcoin, pushing back down. Again, really depends on rates tomorrow for Bitcoin. You have to realize Bitcoin is part of the market, right? It's not going to be not part of the market, especially with what's currently going on. I believe it will front run everything once we do come out of the recession. But right now it's just going to act like everything else until we get again clarity for at least 6 months out. Then the market will make a move at that point. Oil still sitting at $95 a barrel. Tesla, interesting spot. It hit off the 20 nicely and essentially started selling off. Played this to the downside in the morning a couple times, made some nice scalps out of it. Has strong support here at the 756. So potentially tomorrow, I think we could get everything is set up for like a nice bounce tomorrow, leading into Powell. But again, I think it really just depends what he comes up with. Again, will really determine if we continue or if we start selling back down heavily into tomorrow. Yes, that's how much power this man has. So Shop has earnings in the morning. So this one's interesting. It actually gapped down. This thing came crumbling down quickly. So I want to see where this is tomorrow in the morning. So again, sympathy plays. I'm watching Amazon for this as well tomorrow. If they start selling off heavily, forward guidance. Again, this thing was supposed to be 2K in the beginning of the year. A lot of price targets for 2K, and this thing just sold off like crazy. And then I had a stock split down when it was like 100 and something, I think. I don't remember what it was. It was like maybe 400 at that point in stock split. So now Shop is just absolute wreck. So nonetheless, I mean, it's good to play if you're scalping, but like long-term investments, I definitely wouldn't be investing in Shop. There's just a lot of bad things going on. They do have a lot of good partnerships, but nonetheless, I mean, it's a hot mess. So we'll see what happens with the earnings. Media again, Media will be interesting, especially with Snap. You do have YouTube, but YouTube is kind of its own thing. It's not really that kind of media. I don't think, even though it does heavily rely on ads, um, I think Meta can get hit pretty hard tomorrow evening. We have to watch this one to see what it does on this. Again, it could be a potential break on Facebook if it does pop above the 164 tomorrow. This thing could get a nice run. Again, you got a lot of resistance right here. So on these 200 and the 50, so could potentially rip in tomorrow. But again, whatever, it's going to be halted by whatever happens with the Fed. So, and then again, it's I reiterate this even for myself, is the fact that it doesn't matter what you and I interpret the report. If it comes in at 100, the market might really like that for whatever reason, and just start running. Maybe they like the fact that the Fed are taking action. Maybe they don't, and it sells off. One thing to consider is that your earnings and everything else is going to be hit majorly for every rate increase that we get. So again, very historic day tomorrow. We'll have to see what happens. BA has really been floating. This thing has been wanting to sell. It tried to sell heavy yesterday. It's consolidating again. This is what I'm talking about, breakouts. Everybody's talking about breakouts. This ascending wedge. It broke out. It tried to really dip hard. Again, normally it goes 75% of this, so it should have been at least down to 148. Tried pretty good there for a minute, but now it's just hovering here. So I want to see what happens with BA. The banks, again, always concerning is if the banks start giving out. JPM broke down back below. That's not a good sign. If it can't break back above the 115 overnight, that could be a concern. Goldman Sachs rejected. Does this come all the way back down to 307? We have to see if it breaks that. We're going to get a bounce and then just continuing selling. So you have to watch for that. Bank of America rejected hard. Again, this is normal. When you get a break and you test the 50 for the first time, you're going to get rejected. Bounce off the 20 in that second attempt. Hopefully can break it. If not, then you could break this back down and start going. And again, the event tomorrow, well, it doesn't really matter technical wise. If it's bad, again, if it's over 75, everybody's expecting 75. So if we get 100, then it could be concerning. And then again, I don't know why people aren't seeing that. It's already concerning even with any kind of rate hike tomorrow. If he comes in with no rate hike, that would be a very positive aspect in my opinion, but I don't see that happening. I see, if nothing, maybe a 50, more than likely a 75, and I think a pretty strong chance for a 100-point basis move going into tomorrow. So we have to see. We have to see what happens, and then things change dramatically from that point. So with all that being said, I kind of rambled a lot. I did talk a lot. I didn't really go over a lot because it's really ideal to watch what's playing tomorrow. So watch continuations on Google, watch continuations on, I can look over Microsoft here. I didn't go over Microsoft, but Microsoft right into support essentially at the 251. If it breaks that, could be concerning. 241 could gap all the way down to that. Come up and retest the 259. Could be a strong possibility too. So looking to see what happens there. But watch continuations on Microsoft, Google, watch Tesla, watch Amazon and Shop tomorrow. Again, if something bad happens with Shop, you can expect Amazon will do the same thing. And then watch preparation for Meta tomorrow. Again, this is one of the bigger weeks. We need to see what happens. Watch banks, see if banks hold. And that's pretty much what I got. So if you made it this far, I appreciate you. Go and drop a like. Until next time, I'll see you guys later.